So you're thinking about buying a new home or maybe even refinancing. Before you do, I have a few do's and don'ts that you may want to consider. Hi, welcome to my channel, WIregrass Homes and Real Estate. My name is Erika McLean and I'm a realtor at Team Linda Simmons in Enterprise, Alabama. So you're thinking of buying a house or maybe even refinancing, and you're trying to figure out what to do as far as your credit is concerned. I'm sure you've heard you need to do this, you need to do that. Well, I do want to disclose I am not a mortgage loan officer. If you are really putting some serious thought into this, you need to contact someone you trust ASAP and speak to them. But what I'm telling you today are just things that I've picked up from my own experience buying a house. I've also refinanced a house. And of course, I've seen my clients and what they've gone through. And speaking to loan officers, this is kind of a list that I've just compiled together of some things that you need to keep in mind. So the first thing I'll do are the do's. The number one thing that you want to do is definitely keep your accounts current. You don't want to go, especially 30 days over your due date. Number two, you want to use your credit as usual because, and I have in my mind that there's like this little person at the mortgage company and they're just sitting there watching your accounts. Don't think that's actually what happens, but when you change your credit patterns, your shopping, it kind of sends a red flag to the mortgage company and they may question you on those things. So just, participate as usual as far as using your credit. There are some exceptions to that though. Number three, you want to, if you make any address changes or you have any credit changes, you do want to let your loan officer know. Definitely let your real estate agent know that you've changed address. That's just very important to keep them up to date on that. Again, they look at everything. Okay, so here are your don'ts. These are the things you definitely kind of want to steer away from. Your first don't is going to be don't max out your credit card. So you want to stay 30% below the actual balance that the credit company has allotted you. So for example, say that your credit limit is $5,000. You would want to maintain or not go over $3,500. So you can kind of do the math there. 30% of 5,000 is going to be around 1,500. So subtract that from 5,000 and you want to keep your balance at least 3,500 or below. The next thing that you want to steer away from is applying for new credit. And this is going to be, maybe there's a new credit card offer that is coming to the mail. You just want to maybe put those off. Just wait. Get through the home buying process first and then come back to that later. It's very tempting. You think, oh, it's not going to hurt, but you want the fewest amount of credit pulls as possible. All right, the third thing is you don't want to consolidate because this will also send some red flags to the mortgage company as well, and it's going to affect your debt ratio very badly. So it's actually going to make it look like you're maxed out when you're really not. You've just consolidated, but it's a numbers game. So you want to steer away from consolidating. Number four, don't close out accounts. This will also affect your debt ratio, and it will make it look like your debt has gone up even though you've paid something off. Steer away from this. Just again, wait until you have finished the home buying process. I promise you, trust me on this one, just wait, or just talk to your mortgage officer about this and let them know what you would like to do. You do need to consult with them and make sure if you just really want to pay that debt off, but speak to them, let them know your concerns and what you need to do, and they will guide you. The last thing is probably the one thing I've actually seen affect a few clients of mine, and I told them in the beginning, hey, don't buy a car unless you just have to. In fact, don't buy anything that's a large purchase like that, like a car or a motorcycle, ATV, anything that's going to cause them to, one, pull a credit history, or where you're actually applying for financing. Anything, honestly, that you would finance, especially that large of an amount, stay away from. I did have a case where someone's car broke down. They didn't have a choice, but instead of talking to her loan officer, she just went out and she got a car, and her payments were way higher than what would have been allowed because of her debt to income ratio. So her payments ended up like around $500. Her loan officer said, hey, you can get a car, but you've got to stick in the $250. You can't go above. And that just ruined everything for her. She wasn't able to complete her home purchase because she bought a car. Okay, that's going to wrap it up for credit do's and don'ts. If you'd like my PDF, credit do's and don'ts, please just send me an email, and in the subject line put credit do's and don'ts, and I will make sure I send you the downloadable PDF for that. Don't forget, give this video a thumbs up and hit the subscribe button, and check out the video below. I don't know where I'm going to pop it up here on the screen, but check it out if you want more information on the WIregrass area. I'm slowly trying to build my little library here, and I'm looking forward to next week. I have a business spotlight that I'm excited to do, so be on the lookout for my next edition of Around Town, where I'll be highlighting